Good evening. We begin tonight with breaking news from the global commodities markets, where a dramatic shift has captured the attention of investors and analysts worldwide. Silver, one of the most closely watched precious metals, experienced a significant downturn on Thursday, falling sharply after achieving a remarkable milestone in trading history. The white metal saw its value drop by more than 6% during trading sessions, marking a swift reversal from what had been an unprecedented peak just hours earlier. This development comes against a backdrop of ongoing international tensions and uncertainty that continue to influence financial markets across the globe. The volatility witnessed in silver trading represents one of the most notable movements in the precious metals sector in recent memory. Market participants observed as silver reached an all-time high price point of $120 per ounce before retreating substantially from that historic level. The magnitude of the decline, combined with the rapidity with which it occurred, has prompted widespread discussion among market observers about the factors driving such pronounced price swings in what is traditionally considered a safe haven asset during periods of geopolitical instability. At precisely 10:36 in the morning Eastern Time, silver had surrendered 6.84% of its value, trading at $108.40 per ounce. This marked decline came after the metal had briefly touched the historic threshold that represented a new benchmark in its trading history. The descent from the all-time high to the mid-morning trading level illustrates the intense volatility that characterized Thursday's trading session, with market forces exerting significant downward pressure on the white metal's valuation in a relatively compressed time frame. The movement in silver prices did not occur in isolation. Other precious metals also registered losses during the same trading period, reflecting broader pressures affecting the entire sector. Gold, often viewed as silver's more established counterpart in the precious metals category, likewise experienced a contraction in its market value. Platinum and palladium, two additional metals that occupy important positions in both industrial applications and investment portfolios, similarly posted declines during Thursday's trading activity. This coordinated movement across multiple precious metals suggests systemic factors influencing the sector rather than circumstances unique to any single commodity. The specific timing and magnitude of these price movements paint a detailed picture of Thursday's market dynamics. Gold contracted 4.41% as of 10:44 in the morning Eastern Time, bringing its trading price to $5,133.66 per ounce. This decline in gold's value occurred within minutes of the documented fall in silver prices, indicating synchronized selling pressure or profit-taking activity across precious metals markets. Platinum retreated 1.55% at the same minute, exchanging hands at $2,634.07 per ounce. Meanwhile, palladium fell 1.27%, with its price settling at $1,993.69 per ounce. The context surrounding these price movements includes what market observers describe as persistent geopolitical turmoil. While the specific nature of these international tensions remains a constant feature of the current global landscape, their impact on commodity markets continues to manifest in various ways. Precious metals have historically served as instruments through which investors seek to preserve wealth during uncertain times, making their price movements particularly significant indicators of market sentiment regarding global stability and economic conditions. The contrast between silver's achievement of an all-time high and its subsequent rapid decline within the same trading day underscores the complex dynamics currently at play in commodities markets. The ascent to $120 per ounce represented a culmination of various market forces that had been building over time, while the subsequent plunge of more than 6% demonstrated the equally powerful forces capable of reversing such gains in short order. This pattern of rapid appreciation followed by swift correction has become a notable characteristic of recent precious metals trading. Market participants track these developments closely, as precious metals serve multiple functions within the global economy. Beyond their role as investment vehicles and stores of value, metals like silver and platinum also have significant industrial applications, meaning their prices reflect both financial market sentiment and expectations about manufacturing activity and technological development. The interplay between these various demand sources adds layers of complexity to understanding price movements in the sector. The technical aspects of Thursday's trading reveal the precision with which these movements occurred. The timestamps provided for each metal's price point indicate active monitoring of market conditions throughout the morning hours Eastern Time. The fact that platinum's retreat was documented at the exact same minute as gold's contraction suggests either synchronized selling activity or coordinated market responses to specific news or events occurring at that moment. Such temporal precision in reporting also reflects the speed and sophistication of modern commodity trading platforms. As investors and market analysts process the implications of Thursday's dramatic price action, attention naturally turns to understanding the mechanisms behind such significant volatility. The precious metals market, while substantial in size and global in scope, can experience pronounced price swings when large volumes of buying or selling activity occur within compressed timeframes. The achievement of an all-time high often triggers various responses from market participants, including profit-taking by those who entered positions at lower prices, which can contribute to subsequent declines. Coming up next, we will examine the broader context of these precious metals price movements and explore additional details about how the various metals performed during this tumultuous trading session. The sequence of events that unfolded in precious metals markets on Thursday represents a textbook example of extreme market volatility concentrated within a single trading session. Silver's journey from an unprecedented peak to a substantially lower valuation in a matter of hours illustrates the intensity of forces currently shaping commodity prices. The white metal's trajectory began with what traders and investors had been anticipating as a potential breakthrough moment, as prices climbed steadily toward and then surpassed the psychologically significant barrier of $120 per ounce. This achievement marked a historic milestone that had never before been recorded in the metal's extensive trading history. The significance of reaching an all-time high cannot be understated in market terms. Such moments typically represent the convergence of multiple bullish factors, including sustained buying interest, favorable supply and demand dynamics, and broader macroeconomic conditions that support higher valuations. For silver to have attained this record level indicates that substantial capital had flowed into the metal, driven by investor conviction about its value proposition under prevailing market conditions. The fact that this historic peak was reached amid what observers characterize as persistent geopolitical turmoil adds an additional dimension to understanding the forces at work. However, the celebration of this milestone proved remarkably short-lived. The reversal that followed demonstrated with equal force the capacity for market sentiment to shift rapidly and for selling pressure to overwhelm the buying interest that had propelled prices higher. The decline of more than 6% from elevated levels represents a substantial monetary loss for those who acquired positions near the peak, while potentially creating opportunities for others who view the pullback as a chance to enter the market at more favorable prices. This dynamic interplay between bulls and bears exemplifies the constant tension that drives price discovery in freely traded commodity markets. The specific magnitude of silver's decline merits closer examination. A drop of 6.84% translates to a significant dollar amount when calculated against the elevated price levels at which the metal had been trading. From the all-time high of $120 per ounce to the 10:36 morning Eastern Time price of $108.40 per ounce, the metal surrendered $11.60 per ounce in value. For market participants holding substantial positions, this decline represented meaningful changes in portfolio valuations occurring within an extremely compressed time frame. The synchronized nature of losses across the precious metals complex provides important context for understanding Thursday's market action. The fact that gold, platinum, and palladium all registered declines during the same general time frame suggests that sector-wide factors were influencing trading behavior rather than developments specific to any individual metal. This pattern indicates that investors were reassessing their exposure to precious metals as an asset class, rather than making discriminating judgments about the relative merits of one metal versus another. Gold's performance during the session reflected its status as the most widely held and actively traded precious metal. The 4.41% contraction brought the yellow metal to a price of $5,133.66 per ounce as of 10:44 in the morning Eastern Time. While this decline was proportionally smaller than what silver experienced, it nonetheless represented a substantial move for gold, which typically exhibits somewhat less volatility than its white metal counterpart due to its larger market size and more diverse holder base. The fact that gold was trading above $5,000 per ounce even after this decline indicates the elevated price environment that currently characterizes precious metals markets. Platinum's retreat of 1.55% to $2,634.07 per ounce reflected the dual nature of this metal, which serves both as a precious metal for investment purposes and as an industrial commodity with specific applications in automotive catalytic converters and other manufacturing processes. The relatively modest decline compared to silver and gold may indicate that platinum investors perceived less need to reduce positions dramatically, or it may reflect the metal's smaller overall market size and different investor composition. The precise timing of this price level, documented at 10:44 in the morning Eastern Time, coincides exactly with the recorded gold price, suggesting coordinated observation of market conditions at that specific moment. Palladium, trading at $1,993.69 per ounce after falling 1.27%, rounded out the precious metals complex in Thursday's downturn. Like platinum, palladium serves critical industrial functions, particularly in automotive emission control systems. The relatively contained decline in palladium compared to the more dramatic moves in silver and gold may reflect different supply and demand fundamentals specific to this metal, or it may indicate that palladium holders viewed the broader market volatility as less relevant to their specific investment thesis for this particular commodity. The reference to persistent geopolitical turmoil as a backdrop to these market movements acknowledges the ongoing international tensions that have become fixtures of the current global landscape. Precious metals have traditionally functioned as hedges against various forms of uncertainty, including geopolitical instability, currency devaluation, and economic disruption. The fact that these metals experience significant declines despite the continuation of such tensions suggests a complex relationship between geopolitical events and commodity prices, where the mere persistence of known risks may have less market impact than new developments or changing perceptions about how those risks might evolve. The mechanics of how prices are quoted and recorded in precious metals markets provide additional insight into Thursday's events. Prices are typically expressed per troy ounce, a unit of measurement specific to precious metals that differs slightly from standard ounces used in other contexts. The precision with which prices are reported, down to cents per ounce, reflects the substantial total values involved when institutions and investors trade these commodities in large quantities. A movement of even a few dollars per ounce can represent millions of dollars in gains or losses for major market participants holding significant positions. As we continue our coverage of this developing story, we turn now to examine further implications of these price movements and explore what the specific patterns observed on Thursday reveal about current market dynamics in the precious metals sector. The pattern of price movements documented throughout Thursday's trading session reveals the minute-by-minute nature of modern commodity markets, where values can shift substantially within remarkably brief intervals. The timestamps associated with each metal's recorded price point provide a window into the chronological progression of the sell-off that affected the precious metals sector. Silver's price level was documented at 10:36 in the morning Eastern Time, while gold, platinum, and palladium were all recorded at 10:44 in the morning Eastern Time, just 8 minutes later. This narrow temporal window during which multiple metals registered significant declines suggests a period of heightened trading activity and rapid price adjustments across the sector. The relationship between the various precious metals and their relative performance during periods of market stress offers insights into investor behavior and market structure. Silver, having experienced the most dramatic percentage decline at 6.84%, demonstrated the kind of volatility that has historically characterized this metal. Silver markets, while substantial, are smaller than gold markets, which can result in more pronounced price swings when significant buying or selling volume enters the market. The metal's dual role as both a monetary asset and an industrial commodity with applications in electronics, solar panels, and other technologies adds complexity to its price dynamics. The all-time high price point of $120 per ounce for silver represents a level that market observers had been monitoring as a potential threshold. Round numbers and historic milestones often take on psychological significance in trading, potentially influencing decisions about when to enter or exit positions. The fact that silver retreated substantially after touching this level may indicate that some market participants had predetermined this price point as an opportune moment to realize gains on positions acquired at lower levels. Such profit-taking activity can become self-reinforcing, as initial selling pressure triggers additional sales from others who perceive momentum shifting. Gold's valuation of $5,133.66 per ounce, even after declining 4.41%, underscores the elevated price environment that has characterized the yellow metal in recent times. This price level represents a substantial premium over historical averages and reflects accumulated gains built up over an extended period. The fact that gold maintained a value above $5,000 per ounce despite Thursday's decline indicates the degree to which prices had appreciated prior to this particular trading session. The metal's status as a traditional store of value and its role in central bank reserves worldwide contribute to its position as the anchor of the precious metals complex. The industrial metals within the precious metals category, specifically platinum and palladium, exhibited price behavior that reflected their unique market characteristics. Platinum's price of $2,634.07 per ounce after retreating 1.55% positioned it at a substantial discount to gold on a per-ounce basis, despite platinum's relative scarcity and its own set of industrial applications. This price relationship between platinum and gold fluctuates over time based on supply constraints, demand patterns from the automotive and jewelry industries, and investor preferences for one metal versus another. Palladium's settlement at $1,993.69 per ounce, following its 1.27% decline, placed it below the $2,000 threshold. This metal's price dynamics are heavily influenced by its critical role in gasoline-powered vehicle emission systems, creating a direct linkage between palladium demand and automotive production levels, particularly for conventional internal combustion engine vehicles. The relatively modest decline in palladium compared to silver's sharp drop may reflect different investor bases and distinct fundamental drivers specific to each metal's supply and demand equation. The persistent geopolitical turmoil referenced as context for these market movements encompasses a range of international tensions and uncertainties that have become enduring features of the global landscape. These conditions typically support demand for precious metals as investors seek assets perceived to hold value independently of any single government or currency. The fact that metals experience declines despite the continuation of such circumstances indicates that other factors, potentially including technical market dynamics or shifts in investor positioning, exerted influence on Thursday's price action. Market liquidity conditions play a crucial role in determining how smoothly prices can adjust to changing supply and demand dynamics. In highly liquid markets, large transactions can occur with relatively modest price impacts, as there are numerous willing buyers and sellers at various price levels. During periods of stress or rapid adjustment, however, liquidity can diminish as market participants become more cautious about taking the other side of transactions. This liquidity dynamic may have contributed to the magnitude of price movements observed on Thursday, particularly in the case of silver's sharp decline. The reporting precision evident in the price quotations, with values specified to the cent for each metal, reflects the sophisticated infrastructure that supports modern commodity trading. Electronic trading platforms, real-time price dissemination systems, and global market connectivity enable the kind of transparent price discovery that allows observers worldwide to track developments as they unfold. The ability to document prices at specific timestamps down to the minute provides a detailed record of how markets evolved throughout the session. Trading volumes, while not specified in the available information, typically surge during periods of significant price movement as both existing position holders and new market entrants respond to changing conditions. High volumes can validate the significance of price moves, indicating broad participation in the market action rather than isolated transactions. The pronounced nature of Thursday's declines across multiple metals suggests that substantial trading activity likely accompanied the price changes. The relationship between spot prices, which represent immediate delivery of physical metal, and futures prices, which reflect expectations about future valuations, adds another dimension to precious metals markets. Price movements in spot markets often influence futures markets and vice versa, creating interconnected dynamics that can amplify trends in either direction. The prices quoted for Thursday's trading session represent spot market valuations at the specific times indicated. As we move toward concluding our comprehensive coverage of Thursday's extraordinary precious metals market activity, we prepare to examine the final elements of this significant market event and consider the closing state of these important commodity markets. The comprehensive picture that emerges from Thursday's trading session in precious metals markets is one of significant volatility and substantial price adjustments across the entire sector. The sequence of events, beginning with silver's achievement of an all-time high and progressing through sharp declines across multiple metals, illustrates the dynamic nature of commodity markets and the speed with which valuations can shift in response to changing conditions. The documented price levels and timestamps provide a detailed record of how these markets functioned during a period of heightened activity and investor reassessment. Silver's experience encapsulates the session's dramatic character most vividly. The white metal's ascent to the historic price of $120 per ounce represented a crowning achievement that marked new territory in its trading history. For investors and market participants who had witnessed silver's climb to this unprecedented level, the moment carried significance as a validation of the factors that had supported rising prices. However, the subsequent plunge of more than 6% demonstrated with equal clarity that market conditions can reverse rapidly, transforming celebration into concern as the metal surrendered gains and declined to $108.40 per ounce by 10:36 in the morning Eastern Time. The broader precious metals complex mirrored silver's downward trajectory, albeit with varying degrees of severity. Gold's contraction of 4.41% brought the yellow metal to $5,133.66 per ounce as of 10:44 in the morning Eastern Time. This decline, while proportionally less dramatic than silver's fall, nonetheless represented a meaningful adjustment from higher levels and contributed to the overall sense of pressure affecting the sector. The fact that gold remained above the $5,000 mark even after this decline speaks to the elevated price environment that has characterized recent trading. But the direction of movement clearly indicated selling pressure overcoming buying interest during this particular session. Platinum and palladium completed the picture of sector-wide declines with their respective retreats. Platinum's fall of 1.55% to $2,634.07 per ounce, documented at 10:44 in the morning Eastern Time, represented a more modest adjustment compared to the sharper moves in silver and gold. Similarly, palladium's decline of 1.27%, which brought it to $1,993.69 per ounce, indicated that while selling pressure affected all precious metals, the magnitude of impact varied across the different commodities based on their individual market characteristics and investor bases. The context of persistent geopolitical turmoil within which these price movements occurred adds an important dimension to understanding Thursday's events. Precious metals have long served as refuge assets during periods of international tension and uncertainty, with investors traditionally increasing allocations to these tangible stores of value when confidence in other assets or currencies wavers. The fact that metals experienced significant declines despite the continuation of geopolitical challenges suggests that market dynamics on Thursday reflected factors beyond simple safe haven demand. Possible explanations could include profit-taking after extended price appreciation, technical selling triggered by the achievement of the all-time high in silver, or shifting investor perceptions about the appropriate allocation to precious metals given evolving market conditions. The precision of the recorded data points provides valuable documentation of Thursday's market activity. The specific timestamps of 10:36 in the morning Eastern Time for silver and 10:44 in the morning Eastern Time for gold, platinum, and palladium create a temporal framework for understanding how the sell-off progressed. The 8-minute interval between these observation points, while brief, spans a period during which substantial trading activity and price discovery occurred. The consistency of direction across all metals during this time frame reinforces the interpretation that sector-wide forces were at work, rather than metal-specific developments. For market participants holding positions in precious metals, Thursday's price action represented a significant test of conviction and risk tolerance. Those who had entered positions at lower price levels and maintained them through the climb to record highs-faced decisions about whether the achievement of those milestones represented an opportune exit point or whether further appreciation remained possible. The sharp reversal that followed the all-time high in silver likely prompted urgent reassessments of these positions. Conversely, investors who had been waiting for entry opportunities may have viewed the declines as creating more attractive valuation levels, potentially setting the stage for renewed buying interest. The various roles that precious metals play within the global economy ensure continued attention to their price movements. Beyond their function as investment assets and stores of value, these metals serve critical industrial purposes that tie their demand to manufacturing activity, technological advancement, and economic growth. Silver's applications in electronics and solar energy technology, platinum's use in automotive catalytic converters, and palladium's role in emission control systems create fundamental demand streams independent of investment considerations. The interplay between these different demand sources contributes to the complexity of price formation in precious metals markets. The information available from Thursday's trading provides a snapshot of market conditions at specific moments, but represents only one chapter in the ongoing story of precious metals price evolution. Markets operate continuously during trading hours, with prices adjusting constantly in response to new orders, changing perceptions, and evolving information. The documented prices at 10:36 and 10:44 in the morning Eastern Time capture particular points along a continuous trajectory of price discovery throughout the session. In conclusion, Thursday's precious metals market activity delivered a stark reminder of the volatility that can characterize commodity trading, even for assets traditionally viewed as stable stores of value. Silver's achievement of an all-time high price of $120 per ounce and subsequent plunge of more than 6% to $108.40 per ounce exemplified the dramatic swings possible within a single trading session. Gold, platinum, and palladium joined in the decline with contractions of 4.41%, 1.55%, and 1.27% respectively, bringing their prices to $5,133.66, $2,634.07, and $1,993.69 per ounce. These movements occurred against a backdrop of persistent geopolitical turmoil, creating a complex market environment where multiple factors influenced investor decisions and price outcomes. The documented events of Thursday serve as a detailed record of how precious metals markets functioned during a period of significant volatility and rapid price adjustment. That concludes our coverage of this developing story from the precious metals markets.